execution, of course. Is your plan sound, your go-to-market sound, your pricing sound, et cetera, et cetera. And I think the big part of just answering those questions we did early, we have to have just our go-to-market. We partner with banks. We don't disrupt them. There's this aspect of collaboration that's so key in our business. We have four major banks as investors in our company. We've got traction with amazing tech. So I think when you get that kind of traction, it just gives you a little bit of a base or a floor, or de-risks your business quite a bit. Doesn't mean it's going to be easy, or it doesn't mean it's going to be guaranteed success. You have to execute and you have to earn it every single day. But there's those kind of things that sort of shore that up. And then when you get into a fundraising, it doesn't mean that you're going to get the valuation you want, or you're going to get maybe the amount that you're targeting to raise, but it just, at least with maybe all of those kind of softening a little bit, there's a difference between actually getting funded and not getting funded. And those are the things you really start. You've got to have those right pieces in place to make that happen. And that's where it really gets important.
So is this your hot take? Is your first internet hot take is that you think that there's still funding out there? There's still liquidity in the market. It's just a matter of kind of separating the chaff from the wheat at this point, right? Where last year, maybe there were a lot of fintechs that maybe weren't showing the fundamentals. They weren't showing actual growth. They weren't showing sound business mechanics from a go-to-market perspective. Maybe now that is it's an area of focus for VCs, right? And because there were so many high growth startups last year, the year before, that were kind of fueled by this unprecedented injection of capital into the economy, it was easy to kind of be rolling around in the good times. Today, it's more like there are still successful startups, right? That is, we're one of them, right? So we're going to be the first to say, we're fine. We're not suffering like every other fintech company. But the reality of the situation is that the barrier for getting capital is much higher than it would have been last year, as just kind of a base statement. I don't even know if that's a hot take.
Well, I think you say, are there barriers, or is there a lot of capital still left in the market? Is a lot of capital on the sidelines? Do VCs have tons of dry powder? I think the answer is yes.